Hi, we've rated the Strata Hosur Industrial Fractional Ownership Opportunity 5 as 7.65 on 10. Hi, this is Raj Shah.
Hi, this is Rishi. We are from Invest in Pre-Leased. We help you profit from curated pre-lease proposals.
So, knowing your tenant, but before knowing our tenant, I am going to disclose that since there are two separate tenants this time and they have separate terms, which means that one tenant has a 10-year duration, the other one has a 15-year duration, but we are going to take the low one. So therefore, we are going to be discussing only the lowest ones for the sake of our evaluation. So Rishi, please tell us about the tenants.
Sure. As Raj mentioned, we have two tenants in this particular asset. I'll just give you an overview of both the tenants. Tenant number one, now that's a railway equipment manufacturing company. It's a century-old company based out of France, headquartered out of France. They have been recently acquired by a US-based world's largest locomotive manufacturing company. All put together, they have an employee strength of 20,000 people working for them, and they are present in 24 countries. Tenant number two, now that's an Indian entity. It's into manufacturing of exhaust systems for a lot of automobile companies. The client includes Tata, Mercedes-Benz, TVS Motors, KTM. They have an employee strength of 1,000 plus employees, and they are headquartered of Pune, and they have been in operations for nearly 28 countries. So when we look at the tenant, the profiles, I think we would want to give them 0.5 and 0.5, being of their considering their history of the operations. Raj, what's your take on the Fortune 500 and the profitability?
So neither of these companies are either a Fortune 500 global or Fortune 100 India list, and therefore it gets 0 on 0.25 there. In terms of profitability, both of them are profitable, so 0.25 on 0.25 there. Rishi, what about the tenant industry outlook?
So if we look at the transport systems throughout globally, I'm talking about the tenant number one, which is into railway equipment manufacturing. That industry, if we look at as a whole globally or particularly India infrastructure, it's a growing industry, and we know that there's a lot of work. We have been seeing that a lot of metro work is going across India, a lot of railway work is going in terms of the setting up the infrastructure across India. So I think it has a strong potential to grow here and even overseas. Now, if we look at the tenant number two, we know automobile industry has been thriving in terms of very big way, and exhaust systems play a very important role. So I think both put together, at least maybe considering that EV is also setting up, but still it has time to go in. The exhaust is also required, and I think we have a bright future for them, of course. And that's the reason we would want to go ahead with 0.25 and 0.25 for both these particular industries.
So therefore, knowing your tenant is 1 on 1.25. We now get to know our asset better. Rishi, what about the asset grade?
So we know this is again coming from Strata stable. Again, that the park that we know is Avigna in Hosur Industrial Park. We have always seen, the history, like the last 2 years, we have seen the blocks that have come up in terms of the way they have developed the entire park. So I think, Raj, I am quite confident of this particular asset as well. This will come up very good. The only challenge again here that we always try and mention is this is a BTS, that is a build to suit option again, which is being made as per the specifications of both the tenants that are mentioned here. So again, refraining not to comment on the final product, we want to wait as to how the final product turns out. I would want to rate this as 0.3 or 0.5. But yes, I would want to definitely, I'm quite hopeful of this product also being as per the previous standards.
So Rishi, have you been to Hosur?
Oh yes. So I've been fortunate enough to travel to Hosur and visit the Avigna Industrial Park. Trust me guys, it has been one of the amazing parks that has been developed in a very short span of time. Initially, we were quite hesitant as to how this kind of infrastructure will get developed. But yes, it is definitely worth a view. The kind of development that they have done in such a short span of time, and the kind of infrastructure that has come, the work is absolute quality infrastructure and quality product. So Raj, with this I would want to actually give this asset grade as 0.3 or 0.5. Raj, what's about the IGBC rating and the OC?
So currently the Indian Green Building Council rating is not applicable, so therefore we give it 0 on 0.25. In the future, we've been told the developers are considering it. So as and when they get it, that's the time when we will start giving them marks. In terms of OC received, occupation certificate, not so because it's built to suit. Again, it gets 0 on 0.25 there. In terms of can it be subdivided with independent access? Yes, so there are two tenants. The entire asset has been divided, and therefore it does get marks there. So we give it 0.25 on 0.25. Rishi, could you please tell us about the asset location?
Yes. So we consider Hosur as one of the very key locations to the connectivity that it enjoys. Hosur stands right in the center of Bangalore, Chennai, and Coimbatore. So any movement that you need to do for all these three cities, this becomes the center. Also, as we look at it, Hosur has already been a hub for the manufacturing companies like TVS. You have Mercedes-Benz. You have other companies that are in the vicinity, which have a lot of setup in this particular vicinity. Also, you have a lot of e-com players which are doing a lot of warehousing and a lot of infrastructure setup here. If you look at the current rental of the Avigna Park, we also have Stellar Value Chain, we have Whirlpool, we have Microplastics and Wakefit. Now, all these clients, they have set up a huge setup out here. Also, we look at the connectivity. So, you have a nearest railway station, which is 5 kilometers away from this. You have a airport, which is already operational. Now, there are a lot of plans for this turning into a cargo airport. So, when we look at this kind of infrastructure, we know that the location definitely has a lot of boost. A lot of companies that are there and present in the surrounding areas. And of course, it enjoys a lot amazing connectivity in terms of road infrastructure as well. So, I think all in all, when we look at this asset, and the location, I think I would want to go 0.75 and 0.75. The particular location has lots in store for in the future as well. So I think we can look for a good appreciation as well here.
Okay, so that brings us to knowing our asset as 1.3 on 2. We now come to knowing the deal, that all the terms that are already being discussed. So we'll come to the duration. Like we mentioned earlier, we have a 10-year agreement for the first tenant, and the 15-year agreement for the second one, but we are going to go with the lower one. But 10 years anyway is a good duration. We expect a minimum of 5. So there we are going to give it 0.25 on 0.25. In terms of the lock-in, there's a 5-year lock-in for the first one, 6-year for the second one, but we go with the lower one, which is 5 years. Still good enough because 3 is what we want as a bare minimum. So the lock-in gets 0.3 on 0.3. The penalty or corporate guarantee currently, one is a agreement to lease, the other one still at the LOI stage. We are still going to go with considering it that the entire asset is at LOI stage. So therefore here it does not get any marks, so it gets 0 on 0.2. In terms of the agreement registered ATL, we discussed that. We are still going to consider it as a LOI because one tenant is still at a LOI stage and we give it only 0 on 0.5 there. In terms of the increment, there's a 5% year-on-year increment, which is good enough, which is the standard. Therefore, we give it 0.5 on 0.5. Rishi, what about the rent start date, deposit, and notice period?
Thank you. So, Raj, you rightly mentioned this particular asset. We have 2 tenants. Now, here the rent start date again, like as you had mentioned, this is a BTS, that is a build-to-suit opportunity. So, the construction is still in progress. But the rent start date is going to be immediate once you register the document, once the documentation is in place. So I think 3 to 4 weeks from here, the rent will start for the investors. So the idea or understanding here is the developer is going to pay the rent till the time the opportunity is being handed over to both the tenants. So it's immediate. So that's the reason we'll go with 0.25 on 0.25. When you look at the deposit, again, 6 months of rent, equivalent of 6 months rent is basically the deposit amount. So yes, we would again want to give 0.25 on 0.25. Now, notice period. Here we have got a notice period saying that it is only for 4 months. One of the tenants has given us 4 months notice period, and considering the lowest possible, we are looking at this. So we will go ahead with 0.15 on 0.25 for this particular point as well. So with this, we come down to know your deal as 1.7 on 2.5. Raj, kitna deti hai?
So we now take the net average rental yield for the first 3 years because most asset managers do an excellent top up in the first year and then the second year the yield drops, and which is why we are now taking the net average for the first 3 years. In this case, it's 8.04, which is excellent. The minimum that we want is 8 and therefore we give it 1 out of 1 in this case. In terms of the tenant stickiness, lower than the market rentals, we have an instance of a tenant paying 25. We are paying much lower than that. So therefore, we give it 0.5 on 0.5. Rishi, what about the capital expenditure by the tenants?
Yes. So here, like we have already mentioned also, there are 2 tenants in premise. They are going to share the premise. For any of these tenants to commence their operations, they are definitely requiring a lot of investment from their own side, right from racking or setting up a manufacturing setup. So I think they are going to have a capital expenditure, and that makes a little easier for us because the tenant is going to remain there for a good time. So here we will definitely go ahead with 0.5 on 0.5. Know your ROI brings us to 2 on 2. And now we move on to know your asset manager. Here, I would like to especially mention that Sudarshan and Strata have been pioneers in the fractional real estate space. They have been doing some wonderful work since their inception. Sudarshan is a lawyer himself, and he's got an amazing team that they are running the show together. Again, like we know that Strata is being backed by Elevation Capital, Gruhas, which has been run by founders of Zerodha. So we know that it's a good team. The asset management team is good. The leader is good, and that's the reason we want to go ahead with 0.5, 1.5 for this particular point. What's your take on the asset manager? Is it profitable or not, and the client dashboard?
So the asset manager currently is not profitable. They've been funded, but been told that they'll break even soon. But until such time that they are profitable, we'll have to continue to give them 0 on 0.25. In terms of the client dashboard, now it's very critical that not just in terms of the selling, but even post-sale, the kind of service, etc., that an investor needs. Like for example, they shouldn't have to call anybody for their TDS certificates to know all their investments with Strata, etc. So Strata has invested heavily in technology, and therefore they have a great dashboard for clients where you can log in and whatever details you need, whether it's your ledgers, TDS certificate, etc., can be downloaded, and therefore we give it 0.25 on 0.25 there. Rishi, what about profitable exit given for any asset? Has Strata done that, and what is the total asset under management?
So, unfortunately, Strata has not given any profitable exit for any asset of theirs. We definitely look forward. Now, this is very critical for any asset manager to do that. That gives a confidence booster for the investors. Here, they have not been able to, and we definitely look forward that Strata will do that in the near future. So, here, since they have not done, we give 0.0 and 0.25. Total asset management. Now, this is a very critical element when we look into this. This brings an entire learning curve for any asset management company and the asset manager, because right from listing of their first asset, or even right from scanning the first asset, listing that, bringing investors on board, you have this technology dashboard that comes on play. It has a very amazing ecosystem that gets generated, and there's a lot of learning for the entire team. Here we know that with this asset, I think Strata must have crossed 750 crores plus worth of investment or asset under management, and that's the reason we are going to give them 0.25, 125. Raj, what's your take on the hurdle rate?
So the hurdle rate continues to be 10%, and I'd like to explain that. Basically, Strata will take a 20% performance fee if your IRR is above 10% in any given year. So what that means is, let's say for example, after 5 years, your net returns on this particular asset is 12 rupees, and because the hurdle rate is 10, and assuming in this case that you've invested 100 rupees just for the simplicity's sake, so they're going to charge you 20% over and above that 10% hurdle rate, which is anything about 10 rupees. In this case, it's 2 rupees, right? They're going to charge you 20%. So 20% on 2 rupees is 40 paise. So, and this is applicable only and only at the time of exit and not on a yearly basis. So ideally, we would like the hurdle rate to be 12%. So all asset managers typically charge about 20%. We would expect 12% is something that's nice and healthy. In this case, it's 10%. So therefore, we give it 0.4 on 0.5. So that takes us to knowing your asset manager as 1.4 on 2. So Rishi, finally, what is your take?
So I think Raj, if you look at the entire overview of the asset, you have a good collection of, in terms of good combination of two amazing tenants. You have a good location in terms of Hosur. You have a good developer who is developing an amazing asset. You have a very good asset manager who has a very good success ratio in terms of their assets being launched and getting sold out quite faster. All in all put together, if you look at it, it's a healthy combination. And I think I would want to give them 0.25 and 0.25, as in considering that this is a good asset to go ahead with. What's your take, Raj?
So, apart from what Rishi has mentioned, Strata also controls about 1 million square feet of space in Avigna Industrial Park, and that we also see is a big benefit. Now, these are things that will ensure that during the exit is going to be an advantage for a manager like this. Also, in terms of, because they are already present in terms of managing other things. Let's say, for example, if a new tenant was to come, right? I think Strata, rather than any other asset manager, given in this space may get to know earlier. Now, these are softer things, but these are important. And therefore, we feel overall, right, like she's already mentioned, it's checking all major check boxes that we have. And therefore, we also recommend that you invest in this. And if you have any questions about the rating or fractional ownership overall, please call us. Our numbers are on the screen. And for this particular asset, for this particular fractional ownership opportunity, the total goes to 7.65 on 10. And please like and subscribe to the video. Comment and let us know if you feel that we could improve or whether you liked it. And with that, we're going to say goodbye. Thank you. This is Racha signing off.
Thank you. This is Rishi. See you.